Day trading can be a lucrative and exciting way to invest your money in the stock market, but it's not without its challenges. To be successful in day trading, you need to have a solid understanding of market trends, a well-planned strategy, and discipline. In this article, we'll share some tips and tricks to help you become a successful day trading investor. Start with a plan. Before you begin day trading, it's crucial to have a solid plan in place. This should include your investment goals, risk tolerance, and a strategy for achieving those goals. Write down your plan and stick to it, even when the market is volatile. Keep a trading journal. Recording your trades, market analysis, and emotions can help you identify patterns and make better decisions in the future. A trading journal can also help you track your progress and see what's working and what's not. Diversify your portfolio. Diversifying your portfolio can help reduce risk and increase the chances of success. Consider investing in a mix of stocks, bonds, and other securities to spread out your investments and minimize the impact of any market downturns. Stay informed. Keep up to date with the latest news and market developments. Follow financial news sources, read industry reports, and stay informed about the companies you're investing in. Use stop-loss orders. Stop-loss orders are a key tool for managing risk in day trading. They allow you to set a predetermined price at which you'll sell a stock if it drops below a certain level. This helps you limit your losses and avoid big losses if the market takes a turn for the worse. Manage emotions. Emotional investing can be dangerous in day trading. It's essential to stay calm and rational, even in the face of market volatility. If you're feeling anxious or stressed, take a break and come back to the market when you're thinking clearly. Practice patience. Day trading requires patience and discipline. Don't let emotions drive your decisions, and avoid overtrading. Wait for the right opportunities and stick to your plan. Learn from your mistakes. No one is perfect, and everyone makes mistakes in day trading. The important thing is to learn from your mistakes and use that knowledge to make better decisions in the future. Use technical analysis. Technical analysis is a method of evaluating securities by analyzing statistics generated by market activity, such as past prices and volume. Utilizing technical analysis tools such as trend lines, moving averages, and candlestick charts can help you make informed decisions about when to enter and exit trades. Utilize risk-reward ratios. Risk-reward ratios are a useful tool for determining the potential rewards of a trade relative to the amount of risk involved. By setting a target profit and stop-loss level, you can calculate the risk-reward ratio and determine whether a trade is worth taking. Stay disciplined. Day trading requires discipline and a willingness to stick to your plan. Avoid making impulsive trades and stick to your rules and strategies. It's also important to avoid overtrading, as this can lead to burnout and decreased performance. Have an exit strategy. A well-defined exit strategy can help you maximize profits and minimize losses. Consider using profit targets and stop-loss orders to determine when to exit a trade. Use leverage wisely. Leverage, or borrowing money to invest, can amplify your gains in day trading. However, it can also amplify your losses, so it's important to use leverage wisely and not over-leverage your account. Manage your position size. Position size is the number of shares you hold in a particular stock. It's important to manage your position size to ensure that you're not putting too much money at risk. Consider using a position sizing formula to determine the right position size for each trade. Be aware of market conditions. Different market conditions can require different strategies. For example, in a bullish market, you may want to focus on buying stocks, while in a bearish market, you may want to focus on selling or shorting stocks. Use options for hedging. Options are contracts that give you the right, but not the obligation, to buy or sell a stock at a predetermined price. Consider using options to hedge your portfolio and protect against market downturns. Take breaks. Day trading can be mentally and emotionally draining. It's important to take breaks and step away from the market to recharge and avoid burnout. Seek professional help. If you're just starting out in day trading or struggling with your strategy, consider seeking professional help from a financial advisor or mentor. They can provide valuable advice and guidance to help you achieve your investment goals. Stay updated with new tools and technologies. Technology is constantly evolving, and new tools and technologies are being developed to help traders make better decisions. Stay updated with the latest advancements and consider incorporating new tools and technologies into your trading strategy. Never stop learning. The stock market is constantly changing, and it's important to stay up to date with the latest trends and developments. Read books. attend workshops and conferences, and continue to educate yourself on the market to stay ahead of the game. By following these tips and tricks, you'll be on your way to becoming a successful day trader. Remember to always do your research, stay informed, and stick to your plan. One of the most important key factors to successful day trading is understanding market psychology and emotions. The stock market is not just driven by economic data and company performance, but also by the emotions and sentiments of traders and investors. Market psychology refers to the emotional and cognitive factors that influence market behavior and decision-making. Understanding the psychological factors that drive market movements can help you make more informed trading decisions and avoid emotional mistakes. For example, market participants may react impulsively to news or events, leading to short-term price swings. In these situations, it's important to have a level head and avoid getting caught up in the emotions of the moment. Additionally, mass psychology can also create long-term market trends. For example, when investors become optimistic, they may invest in the stock market, driving prices higher. When they become pessimistic, they may sell their stocks, driving prices lower. By understanding market psychology and emotions, you can better anticipate market movements and make more informed trades. However, it's important to remember that emotions and sentiments can change rapidly, so it's important to stay vigilant and continually monitor market conditions. In conclusion, understanding market psychology and emotions are crucial for successful day trading. By staying aware of the emotions and sentiments that drive market behavior, you can make more informed decisions and avoid emotional mistakes. Day trading can be a challenging and rewarding way to invest in the stock market. By following these tips and tricks, you'll be on your way to becoming a successful day trader. Remember to always do your research and stay informed.